Good morning, it's Monday the 22nd of December. Christmas is only 3 days away and it's time for the Monday morning mortgage market update. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor. Let's take a look at what mortgage rates are doing, why they're doing it, the housing outlook, key news and what it all means for you. So Rightmove's latest weekly mortgage rate data is showing the averages for fixed rate deals is trending down gently. This is especially on shorter and more competitive 2-year deals, whilst 5-year deals are holding steady. Average 2-year fixes for buyers with 60% loan to values still in the high threes, and remortgage rates are also coming through competitively. The top deals at sub 3.9% with 60% loan to value, and some fairly attractive product transfers available. It's a notable shift from where we started the year, and it really does reflect growing confidence in the market from lenders. So last week we saw the Bank of England cutting the base rate from 4% down to 3.75%. This was after data that was showing inflation slowing more than expected in December. And if we take a look at SONIA rates, we can probably predict further rate cuts coming in 2026. So lenders are going to start reflecting this on their pricing fairly soon, I would have thought. It will come through initially on trackers and then into fixed rate deals. And there's a lot of competition in the market at the moment between lenders, and it's really heating up for 2026. We've even seen some brokers suggesting there's a rate war. So we really could see some very good fixed rates coming in by spring. But remember, this is only going to affect you if you're looking to remortgage, move house or purchase within the next 6 to 12 months. For the housing outlook, we're looking at both the Halifax and the Zoopla indices. Zoopla's reporting that house price growth has generally stalled in 2025, and they're expecting a 1.5% growth in 2026. And the strongest rises are expected to be in regions like the Midlands. Both Nationwide and Halifax are pointing to modest growth in 2026, somewhere between 2 and 4%. They're expecting this to come on the back of falling rates and increased affordability. And the official index from the Land Registry shows moderate mid-year price inflation, but the next release of data will be really worth watching. So broadly speaking, we look at a stable market with gentle price rises, but also with some very stark regional differences, with Northern and Midlands markets proving a lot more resilient than the South East. An interesting one from Zoopla said that 2025 saw strong transaction volumes, a 3-year high, but very subdued price growth. And that just points to everything we've been saying about affordability pressures. But they're also pointing to buyer demand returning in 2026. And a little bit more on that rate cut from the Bank of England. It was on the back of the Consumer Price Index dropping down to 3.2%. This is what gave the bank the room to cut the rates, and it's going to very quickly feed into mortgage price expectations. So if your remortgage is due in the next 6 to 12 months, or you're looking to move house or purchase your first home next year, then put getting in touch with a broker right at the top of your Christmas list. Rate competition is increasing, but get something locked in early. Most deals can be repriced later. For first-time buyers, there's modest price growth out there. So with rates reducing, 2026 could well be your year, especially in the Midlands where affordability is a lot less stretched because of the pricing. And if you are looking to remortgage, then make sure you talk to a broker. A product transfer with your existing lender is not always the best option. Make sure you check out the market. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Links are in the bio. Speak to you soon. Bye-bye.